This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 2nd, 2015. Euro dollar. So despite recent weakness in the euro, the market remains confined to a consolidation defined by 114.67 above and 108.19 below. A break on either end is going to be required for a clear directional insight, though the medium-term downtrend does still favor an eventual break below 108.19 and back towards the recent 12-year low going back to March at 104.62. At this point, only a break back above 114.67 would compromise the bearish outlook for the euro. In the interim, the key levels to watch on a short-term basis are Monday's high lows, which come in at 112.78.9 and 109.55 respectively. Sterling dollar. So cable has pulled back over the past several sessions since posting a fresh 2015 high at 159.30, and right now the focus is on a test of previous resistance now turned support at 155.50. If the market can put in a daily close below 155.50 on Thursday, this would open the door for further acceleration of declines and potentially put the pressure back on the downside. However, if the market holds above 155.50 on a daily close basis, it will keep the more immediate pressure on the top side for a potential retest of 159.30 further up. Dollar yen. So dollar yen has been in the process of pulling back and correcting off recent multi-year highs at 125.85, with the market recently extending the correction down just below 122 to 121.94. But as you can see here, going back, the previous resistance turned support in the form of that 122 level is strong, and so the market will have a hard time establishing below 122 for any meaningful period in favor of a bullish resumption back above 125.85. If we do see additional declines below 121.94, the setback should be very well supported, certainly ahead of 120 in favor of that higher low and next upside extension. Euro Swiss. So Euro Swiss continues to be very well supported on dips, with the market potentially in the process of putting in a major recovery after stalling out ahead of 103. At this point, a break back above 105.75, that high that we saw going back to the 4th of June, is required to open the next major acceleration to the top side towards the 108.15 February peak further up. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market is trading with a heavy tone and positioning for a retest of that multi-year low earlier this year, going back to the 2nd of April at 75.33. An eventual break below 75.33 will open the door for the next major downside extension towards the 70 area, while at this point any rally should be very well capped ahead of recent highs that we saw at 78.19. Dollar CAD. So a bit of an interesting development for dollar CAD in Wednesday trade, with the market finally taking out some key resistance in the form of that 125.63 high going back to the 5th of June. The break above now confirms a higher low in place by that low that we saw on the 18th of June around 121.28, and this opens the next upside extension towards a retest of the 2015 peak at 128.35 further up. At this point, any setback should be very well supported ahead of 123. Kiwi dollar. So Kiwi continues to extend its declines to fresh 2015 lows seemingly on a daily basis, and the market is now gravitating closer to that measured move objective, which comes in by the psychological barrier at 65. At this point, any rally should be very well capped ahead of 70, while ultimately only back above 72.32 would compromise the immediate bearish outlook. SPX 500. So the S&P 500 has been under pressure in recent trade, though we did see a bit of a recovery bounce in Wednesday trade, and this could open the door for a bit more of a correction to the top side over the coming sessions. But there is clear evidence of the potential formation of a major top in this market since posting record highs in May at 21.37. However, a break below critical support at 20.40 will be required to confirm this outlook and accelerate declines. Inability to do so will turn this latest corrective upside back into more of a bullish resumption, potentially back towards that record high at 21.37. Gold. So an interesting development for gold also here into Thursday trade, with the market taking out key support at 1170. The interesting thing here is that although we've seen breaks below 1170 in recent trade, this is the first time that the market's looking to establish a close below 1170 and could open the door for an acceleration of declines, forcing a shift in the structure and negating the potential for a basing formation, exposing a retest of the 2014 base at 1131 further down. However, if we see a close back above 1170 on Thursday, this This will keep the basing outlook intact and open the door for fresh upside back towards key resistance at 1232, above which exposes an acceleration into the 11300s.